we're at the strangest point of the industry where you've got headlines that are just happening every single day that would have sent markets 30 and 40% overnight, even if you think back to 2020, 2021. So there's this huge dislocation between fundamentals, adoption, everything that you want to see, and then price action and performance. So like the recurrent theme throughout all of this is like, why is that happening? What is the solution? Who are the teams that are coming in that are quite interested in looking to solve this?
Nothing said on the Edge podcast is a recommendation to buy or sell tokens or securities. This content is for educational and entertainment purposes only. Nothing shared here is financial advice.
Welcome to the Edge podcast. I'm DeFi Dad here with Nomadic. Today's show features our friends from Blockmates, Grant and 563. Guys, thanks for joining us. How are you doing?
Yeah, thanks very much for having us. And yeah, trying to repay the favor and do our podcast circle jerk situation that's going on currently. But yeah, no, I appreciate you having us on.
Yeah, thanks guys. Appreciate it.
Yeah, we got to come on your podcast and it was one of the best conversations I had last year. So really appreciate you guys having us on. And you wrote this 2026 thesis. It's lots and lots and lots of predictions and ideas for what could happen in 2026. We're going to do our best to cover what's the most interesting ideas, what's, the kinds of ideas that maybe we've covered on the Edge podcast, but maybe we kick off with just a little bit more there, though, about what went into this. What are your high-level thoughts on what you guys covered here?
Yeah, I mean, we do this every year. We've been doing it for probably 4 years now, and then me and 563 probably drafted the vast majority of them. Definitely this year, we had Kai help as well, who's another analyst on the team. Previously, I would pen it all down and 563 would go through it and we'd say, does this work? Is this aligned with where we actually see the industry heading? We like to, I don't think we specialize in anything, like really. I feel like you can grow quite quickly by specializing in a specific niche, but I feel like what we do tend to gravitate towards is like what's at the forefront, what's coming next, always trying to like push, see where the industry's moving, and I feel like that's, if we were to niche down and basically have anything as our thing that I suppose our audience will come back to, it's always trying to be at the forefront of the industry. And I hope this thesis does represent that, because I feel like this time it's been a little bit less what are the number one projects that keep an eye on. There is a lot of that, but the industry's in a very, very interesting stage, shall we say, at this point. So I hope we cover that and what the year ahead looks like and how to kind of best position for that, really.
Just before we started recording, I saw a tweet from Vlad Tenev from Robinhood. It looks like they're going to launch tokenized stocks in the US sooner, something like 2,000 plus stocks and tokenized stocks on Ethereum, on their Ethereum L2. And anyways, the price action lately has, really been rough for the whole crypto sector. I feel like every asset has been up, and like to make matters worse, you've got not worse, I guess, because I think many of us do hold some exposure to gold, let's say, but gold and silver outperforming right now, while crypto just cannot catch a bid, cannot prove itself to be this debasement trade, Bitcoin, Ether, whatever. I wanted to just quickly share, there was this hilarious tweet that we found right beforehand, and I'll share my screen here, but if you can hear it, if you're just listening to the podcast. So the tweet says, act as a dollar debasement trade or be Jamaican. This is speaking to Bitcoin, and then this is Bitcoin's response. It's so funny. Anyways, just hilarious, and absolutely captures the moment that we're in. It's been extremely frustrating, but
yeah, guys, let's get into your thesis a bit. I think what I like about what you guys do is it's always like from that crypto native perspective, and I feel like that's where I come from as well. So that's why your stuff resonates with me. But in this piece, so it opens with crypto is winning, tokens aren't. what convinced you this is true right now as opposed to just like a cyclical phase that we're in?
Accountable is the new standard for real-time financial verification. In crypto, financial health still runs on screenshots, lagging audits, and blind trust. But Accountable changes that. Powered by the Data Verification Network, it proves assets and liabilities privately across wallets, exchanges, custodians, and banks. Accountable already secures over $2 billion in verified assets across 115 chains and over 90 data sources. To learn more, go to accountable.capital. In DeFi, most stablecoins ask you to trust them. Trust the collateral, trust the peg, trust the managed risk, but Noon proves it. The stablecoin built for the highest yields, highest returns, long-term. With transparent reserves, real assets, and delta-neutral strategies, access real yields in real time. To learn more, visit app.noon.capital/vaults. Grow wealth exponentially. With Toros leveraged tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With Toros, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. Toros reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. Toros Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. Neutral is the next generation of crypto-native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta-neutral strategies to deliver premium, stable returns without taking market direction risk. Neutral is now officially live to mint NUSD and start earning neutral points. Learn more at neutral.fi.
I feel like we're at the strangest point of the industry where you've got headlines that are just happening every single day that would have sent markets 30 and 40% overnight, even if you think back to 2020, 2021. So there's this huge dislocation between fundamentals, adoption, everything that you want to see, and then price action and performance. So like the recurrent theme throughout all of this is like, why is that happening? What is the solution? Who are the teams like coming in that are quite interested in looking to solve this? And you know, where does the industry go from here? So like that's a huge recurrent theme that we'll see throughout all this. But yeah, I don't know if 563's got anything to add on to the end of that one.
Yeah, and like you said, the industry today is so different from crypto from 5 years ago. I think we pulled forward so many, valuations that were unreasonable in 2021, and we're just coming back to reality. And I think that process is going to take quite a while. It has taken quite a while. So even just treading water here would have been, pumping prices back in the day, just because we have to come back down to earth for so many of these protocols. So the underlying looks great, but you have to right that ship, because it's the story that we were selling in 2021 was just unreasonable at the time.
Yeah, and I totally agree with this sentiment. But I do find, in our industry, the pendulum just shifts too far. So yes, there needs to be a massive cull of trash and tokens that have no value and are meaningless. But I step back and I look at what tokens have done, and I still think tokens are one of the biggest innovations that, crypto has brought us. So yeah, there's stable coins. That's great. The invention of the AMM, but just tokenization and tokens are just amazing. And I'm excited for the trajectory we're finally on with this tech about, hey, token holder rights. We need to accrue value to the token holders. We need to give these users reasons to hold these tokens, and it's just going to be a net good. So I feel like I always have a way to spin things positive when, they don't look so good, but, that's why I'm a long-term bag holder community member with a lot of tokens.
If DeFi crypto is successful, then it tends to rewire the back end of Wall Street and, finance applications that we use. And we benefit from that. And you don't have to then be a crypto native who knows how to use a self-custody wallet. It just, it begins to power stablecoin yields, or maybe your buddies are able to use their tokenized stock on Robinhood, and they're able to borrow against something like Aave on the Robinhood Ethereum L2. So how do you like marry these two end results? Like we want folks to be keenly aware of the adoption and success of crypto, but the presence of crypto is being abstracted away because the technology is rightfully being integrated into the back end. I'm honestly struggling with this quite a bit. I that's why I'm asking you. I don't have the answers here.
Yeah, it's weird, isn't it? Because I think we probably all here believe that the more the fundamentals tick up and to the right, and the more it gets interwoven into the fabric of society, finance, and everything in between, social, the more it inherently just becomes invisible. And that's like never really been like a wild idea. I feel like everyone was on the same page with that, just because we've had the experience of going through from 2017, 18, like early DeFi summer days where everything was inherently clunky, and that was just like, oh well, we're just sewing like interwoven into this game that we just absolutely love it, and we will put up with all like the BS that it takes to actually onboard. But that's just not going to fly with the rest of the world. So things like Privy come along. There's like social sign-in, like a lot of account abstraction, asset abstraction stuff coming online now, and a lot more integrations are happening on like the traditional finance side, and it'd be like some permission DeFi stuff coming online too. And it's like that's all well and good, but we should not think about them as just like crypto apps. And I know 563's got a few good lines on this, but the crypto apps that will actually succeed will not be defining themselves as crypto apps, if that makes sense going forward, I think. And it's really, really, really weird that it's something that we're all just going to have to come to terms with and come to grips with. Like, look at football.fun, for example. The onboarding process for that, yes, it still feels a tiny little bit crypto-ish if you know what you're looking out for, but at the end of the day, it's a brilliant user experience. There's got so much traction, like, getting from the real world. A lot of people don't even know it's running on crypto rails, and I feel like that's the way everything's going. We've got to also accept that because the infrastructure is now beginning to be so seamless, it just becomes invisible. It's a weird thing because you want it to be everywhere, but you know it has to come with that grown-up stage as well.
Yeah, you know, I don't think the vast majority of people that are using crypto in the future are going to know they're using the blockchain on the back end. No one these days, we don't call ourselves an internet company, right? But we use the internet as part of our job. I think it's the same thing is going to happen with crypto. People just use it because it's the tool that makes their business run efficiently. And that's fine. I mean, value is still going to accrue. It might not accrue to shiny tokens, but it's either going to accrue to equity, or maybe they tokenize some of their equity and you can get exposure that way. I think people are kind of stuck in the past and thinking that we're going to go back to a place where you can just spin up a metaverse token and raise it to $1 billion, but we're just not there anymore. I think people are smartening up, and I think it's a good thing. The industry is maturing, and you know the right tech is being used by the big boys now.
This kind of keys in on something that I've been thinking a lot about, and you touch on this in your piece, but it's this idea of basically you say real companies are coming that are using crypto that won't have tokens. And I'm wondering what that trend is going to look like. Like I see, like Santiago's company, Inversion, taking traditional companies and bringing them on chain and using crypto rails to enhance them. I mean, those don't necessarily need to then go launch a token or anything like that. They're actually just using the attributes and the features of blockchain to make their business better. I love that trend. I feel like, yeah, maybe I'm going to be clinging on to a bit of the past, but like you said, you have to move on, and maybe we're going into a world where not every single thing needs to then launch a token. Like, what if you just use Privy to make your business better? What if you just use, social sign, whatever, right? But yeah, which path do you think becomes dominant here, and why? Like, what are you seeing?
So I think if you like drill down into what you're saying there's two like really interesting stats that we've been looking at like extensively. So revenue per employee, like top businesses on planet Earth are all crypto companies. The only one that comes anywhere near them is OnlyFans, funnily enough, right? And then if you look at the quickest companies to $100 million worth of revenue, they're all crypto companies, right? So yes, there is an inherent idea that speculation is at the forefront of all these, but there's also token issuance, like Tether, and like Tether pumped off on Hyperliquid, Axiom. Like there's just a million crypto companies that have managed to reach like significant revenues and also do it in an extremely hyper efficient way, right? That idea can be applied on traditional businesses, I think, right? So if this path continues and it is hyper efficient to be able to get to ridiculous numbers of revenue with very, very limited employees, this isn't even accounting for what's happening with Claude and Claude Code at the minute. We're like not even thinking that far ahead. That will only accelerate that. Why do you need the headache of launching a token? Right? Because it's a distraction, and for the most part, it's equally as important and equally as time consuming as the product in and of itself. If it's just this kind of like pseudo token that floats in thin air that has absolutely no correlation back to the fundamentals of what's actually happening on the business side, which we can argue the vast majority of tokens are, it's like this weird middle ground of pseudo equity that has no utility, might have governance rights, but then if you get acquired, you don't capture the upside in the acquisition because the token just stays. It's like, what's going on? Like, why have that? There's no need for that. So it's either the way that I look at it, and I don't know if you agree or disagree, but teams are just going to have no token, or the market is only going to penalize teams that don't have equity directly tied to the token, or the market is going to reward teams that have equity directly tied to the token. And there's a few teams that are working on this, which we can get into a little bit later, but that's the crux of the issue, I think, and that's what I think we're going to see going forward. A lot of people won't like that because there's not as many tokens, but you've been investing in a lot of tokens over the past 2 years. You've been destroyed anyway.
With tokens as well, there's been this massive pressure for, from the community, for the team not to hold too much of a percentage of the token. That also doesn't really translate to the real world. Like in the real world, of course, Elon Musk wants to own as much as possible of Tesla, right? And people champion that. However, in crypto, if a founder's like, hey, I own 50% of the token supply, people hate that. So there's this we want incentives to be aligned, but there's this kind of mismatch of what we see in the real world versus crypto. And I don't really have a solution here. It's just something that I've noticed that I don't really know how that realigns itself either. I don't know if you guys have thought about this at all, but
I think I have an answer to that. I think the reason that there's this assumption that it's not a good thing when the team or founders or investors own too much of a token supply, it's because the original token that everyone bet on was an L1 token. And so the promise of an Ethereum, I think Ethereum's ultimate value is to be neutral and uncensorable. And so you need that obviously for this world ledger for us to transact on. And that makes sense again for folks that want to build DeFi protocols and put all of their wealth and stable coins and digital assets on chain. But it doesn't make sense when you're talking about Maple, for example. We just had Maple on for one of our Revenue Meta new episodes, and they look more like a traditional for-profit business that happens to have a token and uses it to their advantage for a number of different reasons, and they're able to share revenue with token holders. But
yeah, if you look back at the data, I don't know if we did something on this or I was just researching it, but it inherently, the industry started out in a much more ideological and philosophical state than what we're in now, and now it's pushing towards what I'd say the opposite end of that spectrum is pure pragmatism, right? So yes, there are some happy trade-offs, and I also think there's a dire need for immutable permissionless contracts still to be deployed, right? But at the same time, you cannot then go and classify what that token distribution schedule and incentives and putting your big boy pants on. Those two things look totally different on how you get that token into circulation, or whether you actually lodge a token in and of itself, right? So let's say it's something like Liquidity or Uniswap even, for example, purely permissionless DeFi, that the real ethos and core of what crypto should be. I see that just as a public good, right? And if it required a lot of money to be raised to actually get that into the world, as a greater good for humanity, that's all well and good. I don't think you can then expect that token to have as much token holder value or like be purely incentive driven to make as much profit as physically possible as something like a Maple, for example, or like a Hyperliquid, or like insert anyone that is profit first, right? So it's weird that like a token is a token is a token. It's not. Like there's multiple different ways of what that actually should look like. Is it purely for incentives? Is it for returning profit back to the holders? Is it like purely utility token? Is it used to skew the network? Like there's a million different ways that you can kind of like skin that, right? So going forward, I think teams are just going to be inherently more profitable and reach product market fit better because the market is going to demand that, you know, as this washout continues to happen. And then they're probably going to be sat thinking like, do I really need someone sitting in Discord telling me to do more marketing so that they can like reap profit? And I'm going to be sat here and be ostracized if I ever need to sell. Like I want my founders to get rich, like really, really rich. And that means I do as well. Like if I'm an investor, right? That is just not a thing in this industry. It's like looked out upon. It's just like everyone's looking at the unlocks, what's going to happen, and blah, 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 blah. It's really weird. It needs to change. I just don't know how we get there quicker.
You guys make some great points about the valuations of L1s needing to come down, that there's a bit about general purpose chains that we just don't need as many of these. And then I think you talk a bit about L2s. This is a great segue. Can you talk more about like your thinking there? And I think some of the ideas we're using to explain why certain DeFi protocols don't need as decentralized of a token supply and so forth.
Yeah, I'll kick it off and then hand it to 563 as well. I think we've seen, particularly in the recent vintage and even last cycle, to be honest, there just purely isn't enough demand for block space given our current user group. And that's not to say that it won't increase 10x or even 100x in the next 5 to 10 years or even a bit longer. But I think the network should be scaling along with that. And I think this kind of idea that, think back to 2020, Ethereum gets congested, no one can afford to actually use the chain, so then the L2 spin up, but there's also the alt L1 thesis, and that adds such a speculative premium on it because of Ethereum's market cap at the time, and then this created this weird blueprint of teams being able to raise ungodly amounts of money for a general purpose chain that had one tiny little tweak, whether it was TPS, throughput. Now we're starting to see it get a little bit more inventive with a rotating sequencer at the L1, or like it might have privacy enshrined. Like I feel like Ethereum, Solana, Base, I'm really intrigued to see what happens with Mega Reef. I feel like that's enough kind of like general purpose for the demand. And I feel like anything that's coming now, trying to play that same playbook of like extremely high valuation, defend the market cap and run off into the distance with a shit ton of money, those days are gone, right? And now I feel like there is also a gap for hyper-specific networks from the ground up with an idea in mind, with a like perfect use case, but that only comes with being able to control every aspect of the stack. And double click into Tempo, but I'll leave some room for 563 to talk. So
I think you nailed it, man. I don't think the industry needs a dozen $billion or tens of billions of dollar networks when Ethereum and Solana handle 99% of applications. Like you could always say like Hyperliquid or these app specific chains. I think those definitely do play into it. But yeah, for general purpose, I don't see why we need anything else besides those two.
Guys, correct me if I've kind of got this wrong, but my takeaway from your piece is you talk about second mover advantage and you start saying that distribution is going to matter a lot more than innovation. This really stood out to me because distribution is clearly so important now in this crypto world that we live in. Like you look at Base, you look at what's happening with Robinhood. You know, I have this worry that these big players are just going to come in and use the open source tech and they're going to have everything. I mean, some would call that adoption and just say you should be happy with that. And maybe that's in part true. It's all very nuanced, but I guess, yeah, like what does real distribution look like today in crypto in practical terms?
Yeah, I think it's the one I'm most concerned about is, but at the same time I think it'll do well, is Tempo, because you just look at some of their launch partners, any one of those launch partners like Anthropic, OpenAI, Visa, MasterCard, these are like once a quarter major announcements for any of the names that we've mentioned prior to that statement, right? And then there's another 50 of them. You're also throwing into the mix that they've got an ungodly amount of money. They've already got, they're the internet checkout. like the checkout page of the internet. So they've controlled the merchant side, they've controlled the commerce side. It's basically everything that you're seeing. If then you start bundling in like a network built from the ground up with specific priority lanes for just payments, there's AMM then trying to at the within like Tempo as a network in and of itself. So everything's being built from the ground up with a specific use case in mind. And I just think that distribution is really, really, really key, particularly if there's so much money to be made for those guys. And then you start looking at how stablecoins can reduce, like, what is it, like 2.9 to 3% of all Visa and MasterCard fees. And you've also got this weird clawback thing that if you haven't run an online business where there's just an ungodly amount of money that goes into like dispute resolution between people paying with credit cards and debit cards and then saying their product wasn't. And Stripe have to handle all of that. I think they reduced the stablecoin fees for any online purchase down to 1.5%. So they're still capturing that. If they know that the rest of the world is going to move to stablecoin rails, like they want to get out in front of that. They don't want to allow just Visa and MasterCard to just have this weird duopoly over this weird syndicate of banks that controls this thing. So they're definitely moving in that way. Is that net good for the industry and what's kind of came before from an ideological perspective? Absolutely not. I think Anatoly mentioned it, that the industry is going to get netscaped, where everyone's just waited to see where the chips fall after a shitload of money has been thrown at it, a lot of resource, and as you say, all the open source nature of what's came before it. And then the big boys can actually move in who've got end-to-end customers from merchant to checkout to commerce and everything in between. And like the volume that they could put through something like that and just take that 1.5% fee, it just turns them into a colossal business. But the heart says that's a bad thing. The head says that it's a very real chance of that happening. So it's just something we're going to have to watch and play out. But at the same time, there's probably then more merit to something like an Ethereum or Solana where, you know, it is sufficiently decentralized or have like got this really galvanized community behind it, is inherently just trying to be as credibly neutral as physically possible and as a public good. So I don't really know. It's kind of concerning me a little bit, but again, it's just going to keep an eye on it.
No, I was just going to say on the Tempo thing, I'm pretty bullish Tempo, but yeah, I mean, so many of these other payment networks rely on Visa and MasterCard rails. And what's notable for Tempo is it owns the distribution as well as the settlement, which honestly, you kind of need both if you're going to win on the payment side. So I don't see how it happens any other way. If you're already with the merchants and all they have to do is flip a switch and they suddenly pay less money, I just don't see how it ends up any different, unless someone comes in and offers even fewer fees, but I'd be surprised.
I think that I can imagine the same thing playing out where Stripe is able to flip a switch. They have all this distribution. Tempo gets adopted and used by lots of businesses, but I think there's still an underserved large portion of people and businesses on Earth that will not be able to turn to this. I still always think if there was a Chinese version of Stripe that was, you know, building Tempo, the United States government would be like, you're not going to use that. I mean, maybe if they had like some shared investment in it, or if Trump can get, one of his kids to invest in it.
One thing too is like, I think they're clearly set up to do really well with payments. And something I've been thinking too is like, how does the rest of the pie get divided up? Like clearly trading is very valuable. And then just kind of finance in general, I think is very valuable. Like where are people parking their money? Where are they doing borrowing and lending activity? Right now, that's predominantly on Ethereum. Right now, the trading, I'd say, is captured, you know, mostly by Solana and Hyperliquid at the moment, probably. So yeah, maybe does Tempo take the payments segment? Is there still enough to eat for those others to play catch up? I mean, not really playing catch up. Tempo's not live yet, but I think we're already anointing them as like the king without even launching a blockchain. But yeah, I really don't know how this is going to play out. I think it's going to be fascinating to witness, and I know we'll be following it closely.
Yeah, the other big 8,000 pound gorilla in the room is like Larry Fink coming out and saying that we need to move towards like hyper tokenization way quicker than what we're actually doing. And then it's just like BlackRock are on the board of every impressive company on the planet. They own vast majority like of real estate across the US. I'm concerned that there's no way that they are not going to consider just building their own network, right? There is no way that they're not going to consider just actually going to do that. If history is going to repeat itself, they're going to want to control as much of everything as physically possible. That is a big concern. There's no head and heart about this one. That's just generally just a major concern that I have going into 26 and beyond.
I've been talking to a few of the big vault operators, and one of them, I think, pretty clearly thinks that TradFi is going to come in and use their vault tech, their vault infrastructure. Another one that's been around for a long time, I won't mention who they are, but they're pretty confident TradFi is going to come in, look at what they've been doing, not use any of it, build their own vault infrastructure because they want to capture all of the revenue. They don't want to be paying any amount of bips to somebody that's not in their control. So to your point, I think this is going to be interesting as well. And I don't know where I land just yet. One of them I can talk about, the one that we talked to the other day, it's Veda. They've kind of proven that they can handle large amounts of value. You know, they've been doing this experiment in the open, and I think a lot of TradFi or just institutions in general have seen it and they're comfortable with it. Like the Kraken announcement the other day where Veda is powering Kraken's DeFi earn product. So yeah, and maybe it's not like, hey, everybody's just going to abandon this stuff and build their own stuff. I think it's going to be a bit of both. But yeah, what do the massive players like BlackRock do? I don't know. I mean, right now they still custody with Coinbase, as far as I know, and a few other players. So they haven't developed their own custody solutions that I'm aware of yet. I don't know.
Yeah, and I think these companies coming in are all going to do these build versus buy analysis anyway. Like, there's plenty of opportunity for them to come on chain and see what, Ethereum or what Solana has to offer. And it's kind of the L1's job to advertise themselves as the place to come and build. And for some, that's just going to be perfect. They're just going to come on chain and go on one of those chains. And others, it's probably within their best interest to build their own. But I don't think it's necessarily one or the other. I think it's going to be a mix.
The thing that is really difficult to replicate, and I do think is part of the reason that, some of the top L1s, top DeFi protocols can continue to grow is, in the case of something like Ethereum, a track record of 10 years of uptime, knowing that it is this like truly neutral network that has so much riding on it, so much built on it. It's difficult to replicate that. It's trust in the end. That's what I'm trying to get to, is that it is trust that is very difficult to rebuild overnight. And so right now, I'm not surprised that someone like Kraken, who's more crypto native, they need to move fast and compete with some of their competitors like Coinbase or Robinhood. So they've got this awesome Kraken earn product, and it's powered by Veda, and it happens on chain. I don't know if someone like BlackRock or a bank will eventually adopt Veda if the barriers to building their own version of Veda vaults becomes that much less.
There's actually a third path here that we haven't talked about yet. Excuse me. But you guys talk about it in your piece, and this is this like M&A activity. So another way around this whole problem is some big player comes in and just acquires the team, acquires the labs entity. So I think you mentioned this in your piece when Circle basically just came in and took the Axelar talent and brain trust and left the token in the Discord to wither on the vine, basically. But yeah, maybe speak to that a bit, because that to me is like another path where these big players kind of get what they want, solve their problems. Hey, we're just gonna buy the people that made this, get them to remake it, and boom, we own it.
This is why I think there's a recurrent theme of investor protections and tokenized equity that has to happen, because if there's a lot of teams that are distressed, there's a lot of teams that have been funding operations by selling tokens, and whether that was agreed upon or not, they just haven't achieved product market fit, so they've done everything they could in their power to stay alive and relevant for as long as possible before they have to close up shop. there are so many teams on networks that were promised to be the next thing since sliced bread that have dedicated some of their best lives of the year to actually go and build certain products that were native to a specific network. Just as a byproduct that is completely out of control that the network hasn't taken off. There is so much talent and there is so much like great product that's being built, but it's just in a far-flung bridge that is really questionable to actually go and see. It's got no users, blah, 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 blah. They are ripe for mergers and acquisitions and bundling up of specific products into a product suite. I think what you're starting to see is like everything will converge to a product suite that begins to look like a super app as well. So like, we've seen it a few years back, actually. We've seen everyone wants a money market, everyone wanted an AMM, everyone's been started launching their own stablecoin, and like you play this thing out like over a long enough period of time, like why wouldn't you? If you've got lindiness, users, stickiness, like your whole product suite, like you should probably look to own the whole thing. But there's also another avenue of like, well, the industry doesn't like license its own products properly because everyone was so inherently designed that everything should be open source. But that's just another conversation for another day. But I feel like there's a lot of good teams out there. If they haven't had like talent leakage to AI currently, I feel like they'd be more than willing to join a lot of these big teams. Whether it's just the product that goes, whether it's just the team that goes, and then they build up from the ground up. I've seen a lot of that there. But yeah, at the same time, it always leaves like an open-ended question. Well, what happens to the token, right? And what was the token in the first place? You don't want another Axelar situation. I think there's a few others that have happened over the past few weeks as well. So people who've been holding the token since day one want to be taken along for the ride if there is a merger or acquisition as well and capture that upside. Yeah, I don't know if 563 has got any more points on that one.
No, I mean, we could always transition the conversation over into how you fix that at the different models that exist now and what might exist this year.
MNT is now live on Solana, powered by Mantle Super Portal, where real-world finance and internet capital markets flow. Access Solana native DeFi with MNT by trading, swapping, providing liquidity, and more to maximize your yield. You can now teleport MNT between Solana and Ethereum instantly, securely, and seamlessly at superportal.mantle.xyz.
Katana is an opinionated blockchain. Its opinion is that for DeFi adoption, there are two key things we need: deep liquidity and high yield.
To learn more, go to katana.network. Decibel is the new sound of trading, a fully on-chain trading engine supporting spot markets, perps, and yield to trade global markets. Enjoy trustless execution and sub-penny transaction fees. Join the future of trading at decibel.trade and access the Decibel testnet today.
I mean, MetaDAO has kind of taken the reins and forged this idea of an ownership coin where you have rights associated with the token that ties back to the product that's being built. You're able to actually vote on the success of this project, and those votes carry weight. You have to actually trade it like a prediction market. It's not just meaningless governance votes. So I think steps like that, I mean, Sora is doing something kind of parallel with like tokenizing the debt. There are some models out there that are working towards something like token holder rights. And I think that just accelerates going into the new year, especially because of all the outrage around, like you said, with Axelar and Circle. Padre with Pump was a big one. There was that whole kerfuffle with Aave going back and forth between the DAO and the labs. I think people are just tired of it. They want protection, and I think this is the year they get it.
Just on that as well, there's like, as we're harking back to like the industry growing up, and then like if you want to start to go mainstream and like go toe to toe with the big boys and like get situated alongside apps that people are using all day, every day, like it becomes like an inherent weird magnifying glass that then gets put on the industry, where normalized behavior with inside the industry then just starts to look like idiotic and a bit backwards. So like what's happening like with DAOs and ownership and all of that, there's a lot to be said there, because like, you guys know, like running like a super successful business, like if me and 563 wanted to change like the color of the Blocmates logo, we'd just say, yeah, do you like the look of this, blah 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 blah, and then the decision would be made and we'd go and do it. Feels like the way that governance has got to the point now, it's like the founder can't even fart without deciding whether he's allowed to or not. And it's just like this weird state of the people who are working on the business all day, every day, have the best interests of the business at heart, and they know what's the best for the direction of the business. Random people just sat in Discord just because they're holding the token don't necessarily have like the understanding of like much bigger picture, all the product development roadmap and everything that comes with actually being inside a business day to day. So giving over every decision to random governance vote is stupid and backwards in my opinion. Like actual governance on a board is for dispute resolution when there's basically a gridlock. So that needs looking at as well. I think that comes with tokenized equity and maybe some kind of like futurarchy with what 563 was talking about. But there's just so many like growing pains and like this teenage phase I feel like the industry's going through that just need a little bit of a magnifying glass putting on them.
Just to piggyback on some of the points you made, love the movements that we're seeing with MetaDAO, token holder rights. Blockworks is, I think, doing a good job, creating this like stream of tokens that are actually upholding and doing good things on token holder rights. DeFi Llama just launched their own segment on this. I don't even know if they've announced it yet. A kind of DeFi guy shot this over to me just the other day, but they're tracking this now too. This creates that industry peer pressure that we need to like get people up in the standard, make people more aware of who's missing and who's not like up to snuff. We talked about this the other day on our podcast with Credora and their DeFi ratings. It's like hopefully going to pull the whole industry upwards to a better standard. That's what I want to see happen. I want to pivot us into AI though, and how AI and crypto are intersecting. We saw this mania phase with crypto and AI with lots of stuff happening on virtuals. It was like the pre-bubble, in my opinion. We're going to have probably another bubble, a more sensible bubble, where things are actually working and doing useful activities. So a few of these are headlined by, in your piece, you write about X402. I think we should get into that. And then, Ethereum, their AI sector, their team has just created an ERC 8004, which is just like trustless agents being able to interact with one another. Why don't one of you just break down this landscape? It was in our predictions piece as one of my big things for this year as well. I think that like experimentation sandbox honeymoon phase is over and we're going to get useful stuff in 2026 and beyond. So yeah, whoever wants to run with this one.
I'm really excited for X402. I think for people that haven't been following, it's this native internet token standard between clients and servers. And even beyond that, it's native into HTTP requests themselves. So you don't even have to know you're interacting with crypto into doing this. So it kind of solves that original sin, and they call it the original sin of the internet, where payments weren't part of the equation. When the internet was starting up, people were concerned that how are we going to pay for all these server costs and whatnot of our website? And it would have been so nice if we could just plug a credit card in and just whenever you go onto a website, you pay a tiny fee, something like that. But instead, that wasn't possible because the microtransactions weren't available. So what do we have now? We have ads everywhere, and that's how the internet is paid for. Something like X402 is really exciting because you get to that base level standard on the HTTP level where you can have those microtransactions. So you could have this native browser wallet, you load it with a few dollars, and then you can start doing these microtransactions, whether that's you want to skip this video for 10 cents or you want to access this one API once for 10 or for 3 cents. That starts to become possible. And it gets more into the AI side of it because if you have these AI agents, they can't really open up a bank account, but they can have a mobile, like a browser wallet that they control. And say they want to, pay for like a small version of it, API request, or they want to pay for just a chat bot, or they want to pay for their server costs, anything like that. They can do that on their own now. They don't have to rely on anybody else to come and pay it forward. So I'm excited for where people start to take this. It's being like built up by Coinbase and Cloudflare, so it's not just anybody. And yeah, I'm really excited to see where X402 goes this year. I think last year we got like this first taste of it, but it was kind of, the early experimentations and mostly memes. But I think this year we're going to start to see real products being built on this. So say you have just your MetaMask wallet and you want to read this article and you don't want to pull out your credit card for it. You could interact with the web browser directly and say, here's $1 to access this article, or here's $1 to get like a free or a trial for this website. That becomes possible, and that's a lot simpler for a lot of people compared to pulling out their credit card and doing these tiny transactions. And you can start thinking about where other companies are going to start taking that as far as what they can start getting away with microtransactions that now we have that in the browser.
I'm betting that OnlyFans and the adult film industry will be early adopters there. I feel like that microtransactions could take off even more there.
It's all AI now. Have you seen these videos? I mean, not that I see them. I don't look at them. Not me. But I've heard about them, and I've heard they're getting very, very good. Almost so good you can't tell.
You didn't have that in the thesis.
Where should we go next, guys? Should we talk more infrastructure? Get to some ZK stuff? Maybe like specifically how this will maybe transform Ethereum or other L1s, like ZK's role in scaling essentially.
Yeah, so there's a few interesting things why like it was at the 11th hour that I asked Kai to see if he could include some points on it, but it always seems to be like a culmination of tech, desirable use case, and then maybe some dogfooding of the actual tech in and of itself. So Vitalik's obviously came up with a piece, we can scale the L1, blah, 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 blah. All at the same time that Lighter is showing how impressive it can be from a throughput perspective. All at the same time, exactly what you're saying with like the likes of 3chain, and everyone wants to get the promised land of decentralized credit and how you actually pull that off. Like ZKTLS, I believe, has been tried to get pushed to the forefront for quite a while now. Like even another basic example for people who are still trying to wrap their head around is, let's say you're trying to submit a credit check and you want to get a mortgage, or you want to like rent out an apartment. Usually they're asking you to submit all manner of documents under the sun, but they're really only looking if you're good for the money, right? So you're submitting bank statements, you're submitting like birth certificates, blah, 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 blah. ZKTLS would allow people to only see what they need to see, and you retain all the personal information off the back of it as well. So I feel like it's at this time where, from a technical standpoint, like we're ready. From a demand standpoint, we're ready. From like a product show and use case point, we're definitely ready. Like Light has been absolutely killing it, and I feel like it takes the example I always try and tell people to do, particularly on our team, if they're trying to like pitch something, is always show, don't tell. Right? It's all well and good as kind of like philosophically sitting here and saying how well it is, and there's probably 15 people on earth who can actually talk through ZKs like in depth. Show, don't tell. Show it with a product. Make it real well tangible. Show like the benefits of using it and why it couldn't exist without it. And I feel like we're at that point now. But the only thing is you've got a new type of encryption that's coming around that's like also hot on which we didn't include, but we've just actually released 11 protocols to pay attention to, which is FHE. So that's like another rabbit hole to go down in and of itself, but I feel like the industry likes to fund these big ideas, but we need to get to the application side of actually showing how it can be implemented in it, as opposed to just like, because you can just throw money at like acronyms all day long, right? And the industry has done that, and like all the conversation prior to this point has been, can't just continue to throw a shitload of money at like all these big ideas and then investors get wrecked, blah, 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 blah. But I just feel like we're just at the right time now where the tech meets demand, meets the actual products that are live in the environment as well.
Yeah, and maybe on the Ethereum side, we talked a little bit about, in the piece, about ZK EVM and PeerDAS and all the updates that are happening on the L1. And it kind of goes back to our earlier discussion that really we have the block space now. It's available on the L1. You can go and build things, and now it's just time to put money. You gotta actually build things and to make apps people want to use, and use that block space that is now available. I'm excited that Ethereum is pushed through. You know, they've had this worry for a long time about scalability, but I think we're finally getting to the place where it's less of an issue. You can actually operate on the L1, and anything you can't put on the L1, you can definitely put on an L2 and have no issue at all with scalability.
Yeah, and in that piece that Grant was mentioning, like Vitalik fully came out and said the trilemma is solved, which, you know, if you've been a nerd in crypto, there's always been the trilemma of you've got decentralization, security, and scalability, and you almost can't have all three, or it's been hard to have all three simultaneously. And I think what this new kind of ZK architecture is proving so far is that you can have all three, and they have a path forward to do it. And I think this shocked everybody because a lot of the ZK tech seemed 2 years away from where it was going to be this usable, but I feel like they pulled it forward. And the breakthrough, so all that money that Grant mentioned that got shoveled into ZK maybe did something, I mean, because I think this arrived sooner than everybody was expecting. So there's now a path to the L1 scaling 1000x, as crazy as that sounds. That's still far away, that 1000x marker. It's, I believe it's been given like a 5 to 6 year time frame, but that's like incredible that the L1 could have that on the roadmap now with ZK.
Puffer is building the ultimate vertical in crypto. Your crypto deserves better yields. Better yields require better infrastructure, and Puffer is building it. Puffer Liquid Staking delivers above-market ETH yields, secured with up to $5 billion in slashing penalty protection and buffer. Puffer Institutional offers compliant, secure, above-market ETH yields for DATs, institutions, and large players. Puffer Unify is the first synchronously composable rollup, enabling the next generation of app chains on Ethereum with sub-10 millisecond transactions. Unify AVS enables pre-confirmations, making Ethereum validators more profitable and rollups more scalable. Puffer is premier infrastructure and yield for digital assets. Stake your ETH at app.puffer.fi. Hey folks, I want to tell you about our sponsor Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. As a DeFi investor, I turn to Maple for permissionless institutional quality yield in a single liquid asset backed by over-collateralized loans. Maple's Syrup USDC and Syrup USDT are now supported as collateral for enhanced yields on major DeFi liquidity hubs such as Pendle, Fluid, Camino, Jupiter, Morpho, and Aave. To learn more about Maple, go to maple.finance. I think the promise of scaling with this ZK architecture, ZK tech, it plays into some of the points that were made here around general purpose L1s, us just not needing more of them, and that many of them actually still deserve to absolutely be taken out to the woodshed. There's lots of L2s that deserve this as well. There will be probably, I still believe there will be thousands, tens of thousands potentially of L2s for different reasons. Like different folks are going to want to customize an L2 to their liking, businesses specifically, maybe even governments, but the general purpose L2s that are, trying to be the next Arbitrum or Base or Optimism, I kind of feel like those days are pretty cooked. But one aspect of ZK we haven't covered is privacy. I'm not sure if the industry or if the general public does care as much about privacy. It's something that's easy to, be really virtuous about and wax on about it. But what I do remember is that the price on a number of privacy tokens like Zcash and Monero went up a ton. So I don't know what you guys recall again from the post there, but any thoughts on privacy going into 2026?
Yeah, I think there's a multiple different ways of why this would be interesting. I think for the institutions that are coming in, like just having everything transacted, like particularly if they're a trading firm or a prop firm, then that's not really what they've been used to, and that a lot of their edge might be completely eroded if it was complete public ledger. So the idea of dark pools and being able to kind of like shade certain transactions that are just not needed to be in public, but being able to verify if they actually happened, then I think that's one angle. I also think there's a fucking crazy geopolitical backdrop where a lot of people are like, I do want an escape hatch if required. So I feel like that is another angle. And at the same time, like what we've been talking about at this weird kind of teenage phase of the industry where a lot of people are jaded, like anytime they've believed in anything, they haven't captured the upside, but the industry's moving like directionally in the right direction. I feel like privacy is just one of those fundamental things where it's just like, that is something that is so tangible to people, particularly the problem is it's usually you only realize you need it when it's too late. But it really is like a core ethos of what the industry is about. It's very, very similar crossover. Like there's a huge middle of the Venn diagram between crypto and like people that will value privacy. But again, like the other side of the fence is like, is it inherently practical? Like, is it inherently like towards where the industry is going with regards to pragmatism? Is it a very, very, very easy target for our back? Maybe if there's a change in administration in a couple of years' time, like these are all the things I'm thinking about. But like to wrap my thoughts up around it, it's because I feel like it's one of the only fundamental core ethos pillars of the industry that people can tangibly say that is what we're missing, right? Fundamentals being totally detached from token price, and I feel like it's always going to have a place. It kind of feels weird to talk about it in any other light. Like I feel the same way about when people talk about like revenue mare. It's just like it's like it has to be like that. That's the way that I kind of think about it. But yeah, I don't know if I'm missed anything off what we might have included in the report there.
No, I mean from a practical perspective, how often do you see on the timeline trader ABC is long 100 million of ETH? Here's their stop loss on like hyperliquid. Like, just imagine being that trader and having everybody watch your every move and hunting your stops like that. It's just not a great UI UX, and I think privacy, at least at that level, will become table stakes fairly soon, just because it's a better user experience, and that's what these applications are working towards. And I'm excited that Vitalik has come out and said it's a high priority for Ethereum on the base layer just to have like a privacy sidecar too. So I'm excited to see what happens at that layer too.
Two more topics we want to just get a quick take from you on. Just recently with the run up for gold and silver, perps are, exploding with demand, with volume. There's so much trading volume when it comes to perps for gold and silver and copper and uranium and so forth. Is that a theme that continues to play out throughout the year? Like, is it possible that the trading volume on chain for real world assets, so I'm going to include equities, commodities in there, any sort of like indice or index, is that the future there? Like, I have no doubt digital assets will still play an important role, but like maybe that's maybe that's real adoption that I didn't foresee or expect, that the number one asset that will be traded on chain will actually be a tokenized stock or some tokenized commodity like gold.
Yeah, we were looking this week actually. We did like kind of like we do a weekly research meeting inside the Discord, and it's available to people in Discord and stuff. Silver was the only thing that had higher volume than silver on Hyperliquid was BTC. It was like trading at the same volume as Ethereum, and it was the first time that we'd ever seen anything like that. It was kind of crazy. Similar sort of open interest and stuff, so you can't even just point to it was total wash trading. So that was really, really strange. But I think equities, commodities, different FX, there's orders and orders and orders of magnitude, and the playbook's already been there from Circle and Tether. And it's just like who's gonna fill those shoes? Who's going to be the custodian for like all of equities, all the commodities, all of indices, all of anything you can think of? There is such a huge business opportunity there. I just don't know who's going to do it. Obviously, Tether have got the XAUT product, which is absolutely flying. If you look at the issuance of that thing, it's up and to the right. So you've just seen they've got $2.8 billion worth. Yeah, maybe even more than that. I can't remember what their final number was, but billions of dollars worth of gold in some underground nuclear bunker somewhere. So it's like, that at that scale times 10x or 100x over the next 3 to 5 years, but for basically all assets in existence, and that is only going to continue to increase. And then with that comes, do people want spot exposure, or do they just want to trade the perp? So there's all the picks and shovels that come with that expansion, and I feel like we're just in the very, very, very early days for that.
Yeah, and plus people like trading things that go up for a change. So
yeah, that helps.
What's that feel like? Has anybody experienced that recently?
Can't remember. It's been so long.
I've forgotten as well. Yeah, I could even see Robinhood could play a big role in this. Look at Tether and Circle. We talked about. You've got Coinbase with CBBTC that's grown a ton. That's just tokenized Bitcoin, but there's so much demand to be able to use Bitcoin on chain. They've got the distribution in terms of all these customers, and then they're like, hey, did you know that you don't have to do any trade anymore? You can just, take your Bitcoin in Coinbase custody and just shoot it out as an ERC20 token. So yeah, who knows? Coinbase could be Robinhood, I think, could become a dominant form of tokenized stocks just because of how quickly they're moving and given this announcement that they made today. And then, okay, so final point here, wanted to get your take on, none of this is possible that we're talking about without pro-crypto regulation. And so the Clarity Act, I think is the right way to refer to it, that got struck down. It wasn't going to be good for stable coins, I guess. And I will say, like, Brian Armstrong and Coinbase tend to be like one of the most incredible advocates for the industry. They seem to always be, thinking ahead and putting all their legal firepower into like what's going to be best for on-chain adoption. So they recognized a shortcoming with stablecoin rewards. What are your thoughts on regulation here in 2026? Does the Clarity Act pass? If it does, is it like, is that the start of the bull market? What's next?
I think it just opens the door. I'm really excited for Clarity to pass. And, like all these businesses that have wanted to use crypto in the past, if they're going to be in the US, they've had to worry about actually going to jail just because they're using a piece of technology. So once that gets lifted, I think it's just clear skies for these entrepreneurs to come in and build these businesses. So I'm pumped for something like that to get through. Whether or not it includes the stablecoin bit, I don't really care too much, to be honest. Honestly, Coinbase has been having quite a close hand in drafting the Clarity Act, so I'm not surprised that they're trying to push everything they can into it. But whether or not that gets included, I think either way, I'm very excited for something like that to get passed. I think that's the greatest accelerant to get more businesses on chain. I think that's really what the goal is.
I guarantee there's so much that is just going to go live day one. That's probably already built, probably ready to deploy. Like, yeah, it's gonna be so good for the industry. And I think, like, obviously you got to look at the aligned incentives of why Coinbase want that to pass through with the USDC and Circle holdings. So, but yeah, I think David Sachs came out the other day and said, well, a good compromise is everyone walks away. I feel like a little hard done by, but I feel like it will pass through.
Well, plus they just bought Echo, right? So I'm guessing that's part of their plan.
Yeah, that's a big gamble if they don't think that's going to pass.
I'm just pulling up the Poly market to see what the odds are on Clarity Act passing. It looks like, from what I'm looking at, a 55% chance. I'll take it. That's not bad. Yeah, for 2026. So yeah, hopefully that goes through.
I just noticed today in the Coinbase app that they have a tab now for predict. Like, crazy how like prediction markets were just this goofy thing that Vitalik kept talking about, and everyone that was like early, to Ethereum and, crypto, smart contracts, whatever. We all would like at some point fall into this rabbit hole of prediction markets, and now it's in like seemingly every single fintech app out there, not just like the Coinbases of the world.
Guys, I want to close this out with a question to, either of you can take this if you want, but just curious, with all we've talked about, all these different sectors, where are you looking to deploy some of your own capital over the year in 2026? Feel free to give names if you don't want to give names, sectors, whatever you want.
Yeah, I think we've both been pretty bullish on stuff that's coming out of the MetaDAO camp. A lot of it just down to basically what the recurring themes in the thesis are. A lot of accountability baked into those launches as well. Like, it's not the raise happens, but at the same time, there's basically like monthly allowances and just way more accountability, as opposed to founders being able to front load the get rich phase of actually building anything. So I feel like there's a lot of teams that are going to come out, build similar products to what is already in existence, and just that extra level of, being able to build from the ground up and allow people to participate in the upside. I think like there's a really strong incentive there. So paying a hell of a lot of attention to what's going on in their camp.
Yeah, you took mine, but I'll add on. Everything we've been talking about, we're pretty excited about, honestly. Hyperliquid, I'm very excited to see what they continue to do with perps. And yeah, if Tempo ever drops a token, I'll be pretty excited about that. But we'll see about that. And Polymarket, to be fair.
Do you think anyone else is able to, follow on the heels of Hyperliquid? I know Hyperliquid just continues to be the 800-pound gorilla in the room in terms of perps, but the lighter launch happened in December. By the way, I don't have any investment in any of these other competing platforms either, so just genuinely curious. Like, do you guys see there being a, fast follower, like someone who can be kind of like the call sheet to Polymarket? They're always nipping at their heels. They're competitive, but maybe they never catch them.
I think it has to differentiate enough from Hyperliquid in order to stand on its own 2 feet. Like, if someone wants to come in like lighter and offer no fee trading, that makes sense. Maybe they want to offer mobile first trading, something like that, where it's notably different from Hyperliquid. You can't just bolt it on. Otherwise, I think Hyperliquid just gets 90% of the users. But I'm curious if you have different thoughts, Grant.
Yeah, it probably just plays out in a regular power law, similar to how tier 1, 2, and 3 exchanges are. There's enough trading activity out there. There's enough obvious product market fit of what came before it with the likes of Hyperliquid. And let's not forget there was many that came before it. We were laughing the other day at GMX is still making $45 million a year, and it's at $75 million market cap. It's fully vested, fully circulating. There's enough meat in these businesses to be stuck around, and like in anyone's eyes, that's like a really, really successful business. So you do just get this categorization of like tier 1, 2s, and 3s, but the vast majority just usually plays out in some kind of power law dynamic, I think.
Sorry, did you say does GMX generate $45 million in revenue per year right now? Like that's not fees, that's revenue.
In fees, and the portion of that distributed towards token holders is like 11 million.
Wow.
Which is just like a sleeper that nobody talks about, and it's just like in anyone's book that's like extremely profitable business. It's just crazy.
We've kept you way over time. We would love to have you both back in the future. Thank you for being so generous with your time here today. Such an enjoyable conversation. And we want to remind our listeners that they should learn more about Blockmates. They should subscribe to Blockmates by going to blockmates.com. Follow Blockmates on Twitter. Follow Grant Blockmates on Twitter. That's Grant's personal handle. Follow 563 DeFi. That's 563's handle. And then, guys, I want to give you the final word and thank you again.
Yeah, thanks so much for having us, gents. It's always a pleasure, and I feel like it's about time to get you guys back on. There's been an awful lot of stuff happening, and thanks again. I really appreciate it.
Yeah, thanks, fellas. This was fun.
Thanks, everyone, for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.